What up, bear market buddies? In today's video, we're going to be talking about DCA is dead. I'm also going to give you an example later in this video how the true DCA works and how you can turn 10K into 20K in just a matter of days. No, it's not a gimmick. Yes, it's a legitimate arbitrage, and I have examples to show you. Before we get into that, let's talk about DCA. If you don't know what DCA stands for, it stands for dollar cost average. And the TLDR on a dollar cost average, instead of buying at the Pico top or crater bottom, whatever you want to call it, instead you're getting an average price distributed between a certain period of time. There's different ways you can DCA, but the most common is to figure out how much you want to invest and in what asset you want to invest. But there is a problem with the DCA. If you don't do it at the right time and you don't do it with the right asset, you can basically get completely and utterly wrecked. This is why I'm claiming DCA is dead. What DCA should stand for is dollar cost arbitrage. Now that is the key. I'll explain that later in this video, how this strategy would work, and I'll talk about the details on it, and I'll also give you an example to show you how it worked. Let's go and get into this. So before I get into the dollar cost arbitrage strategy, let's go and explain why people would use the DCA. First, there's no emotion involved. You literally say, hey, I'm going to buy on the first of every month for the next 10 months, hold your nose and buy. It could be 50K, 60K, 70K for Bitcoin. It doesn't matter. You set the date, you set the time, you buy. That's it. Hold your nose and buy. Second, you avoid buying the top. The reason why, unless the top is literally for like, let's say you did 10 months long, which is not likely. That wouldn't be much of a top. It would be like a plane or something. Anyways, you avoid buying the top because charts usually go up and down. And being that it goes up and down, you typically will buy higher, buy lower, buy higher, buy lower, etc. And you can also DCA based on percentage points too. So you can say, hey, I'll buy Bitcoin when it goes down 10% or down every 5%, etc. The third reason why a DCA approach is good is it saves time. You don't have to research, do all the TA and say, oh, now's the best time to buy, or oh, now's the best time to buy. Instead, it's just like, I buy here, I buy here, I buy here because, well, time says so. But here is why DCA is dead. If you dollar cost average, let's say around 2021 in the middle of the Bitcoin bull market, well, basically be down over 50%. Let me go and give you an example of what I mean. Here are some numbers I shot out. These are literally ones on the chart. I picked the first day of every single month and I just said, okay, well, we got to invest 100K. Let's see what it would look like. January 1st, invested 10K, 40K BTC price. February 10th, invested 10K, 40K BTC price. Both of those got 0.25 Bitcoin. March 10th, 43K BTC price, got 0.23, and you can see all the numbers here. So basically with this 100K investment and the DCA approach, you would end up having 2.362 Bitcoin at a $43,200 buy-in price. Basically you'd be down over 50% at the time of recording. But don't worry, one Bitcoin is still worth one Bitcoin, right? So anyways, I was just sitting on this thinking, I was like, man, the DCA is dead. And I was doing some wallet searching. I like to do wallet searching from time to time just to see what the degens are up to. And I found something that looked like this. Now, what's really interesting about this wallet, I shot a screenshot, you guys can see it here, is that on November 23rd, I think it was, this guy basically started with 1.94 GMX. Now, at the end, which was like November 27th, I didn't put the dates in here. I didn't want to disclose his address, but if the guy's watching this, he knows who he is. He ended up with 211 GMX in a matter of 4 days. What does this mean? Well, what this means is this guy basically increased his GMX position by 10% in about 4 days. What does that translate into? Well, if you do that for the rest of the year instead of just 10 days, that will create a multiplier on your net worth, especially if you're capitalizing in stablecoins. So I decided to think on this a bit and go for a swim. And after I went for the swim, it clicked. DCA needs a rebrand of dollar cost arbitrage. That's what I wanted to call this strategy, and this is how this strategy would look. So for this dollar cost arbitrage strategy, you need to keep 5 things in mind. These are 5 rules for the DCA the correct way. First, choose an asset you're bullish on and you want to accumulate more of. Do not do this with a junk coin or a coin you don't want to hold, and do not do this with a coin that has high taxes especially. And typically a token with taxes probably isn't something you want to hold. That's just a Ponzi coin, but not financial advice, of course. Now, for this example, I'm going to use GMX. This guy was basically arbitraging GMX, and well, I kind of like GMX. Not financial advice though. I'm not telling anyone to buy. In fact, GMX is probably going to go to 0 at some point in time. Most tokens do, but I'm bullish on GMX. I like the tokenomics. I like the value capture mechanism, and this is an asset that I'm bullish on. Now, the second thing you need to look for is deep liquidity. Now, this is a screenshot I took of the GMX liquidity, and as you can see here across the 4 different pools on Uniswap, it has about $30 million in TVL. Now, for a $400 million market cap coin, that's really not too bad. And being that it's also on multiple chains, that's not its total market cap. This is just the Arbitrum TVL directly on Uniswap. It does have additional liquidity on other chains. So for this token in general, this is a healthy liquidity to market cap ratio. An example of a bad ratio would be something like Hex. Hex has $6.5 million in liquidity for a $17 billion market cap. The liquidity ratio is not even 1%. Now, I'm not going to get into the details on Hex. In fact, Hex is a pretty interesting meme coin, but I'm not telling anyone to buy it. I don't hold any Hex. I'm just giving you guys an example so you can see what a bad liquidity to market cap ratio looks like. Third, you want to look for something that is following the narrative. The reason why a narrative is important is that it has volume around it. So if the narrative is strong, people will be interested, and it has a lot of volume, so people are constantly going to be buying and selling. You'll understand later in this video why the volume is important. Fourth, has a trading range. Now, this is the trading range on GMX. As you can see here, I put down 2 blue lines so you can see what's up. It's basically trading between $38 and $48. It does this multiple times, and the trading range will change over time. This is just the trading range that is trading over at this period. Now, you can see here it trades in a different range a little bit earlier, and it changes from time to time. So make sure you're staying on top of that and watching the ranges. And of course, don't worry if you don't buy the exact bottoms and sell the exact tops. Nobody's going to do that, so don't kill yourself over it. Now, I don't know what the 5th thing was. I don't know why I even said 5. But hey, I did. Whatever. 5 sounds good. And I don't feel like going back and re-recording. So, some things you need to note before you deploy this strategy. Figure out what you're doing. Are you looking to accumulate this coin? Or are you just trying to build your bags, and if you get stuck with the coin, you're okay having it? If you're looking to accumulate the coin, you would take profits in the principal that you put in. So let's say, for example, you invested $1,000 in GMX, and that GMX position turned into $1,100. When you go to sell that, you sell $1,000 worth and keep that $100 in GMX. And if you're staking that, you stake it in the GMX pool, and you're also earning ETH on that and multiplier points. So you're basically going to be trading with this $1,000 in and out of GMX and taking the bonus GMX you get, throwing it on the GMX platform to earn you some ETH and some multiplier points. So depending on the strategy you want, you have to figure out what you want to do. The example I give you is not compounding the rewards, as in it's literally swapping the full stablecoin to GMX and from the GMX to the full stable. So here's the example. This is on October 27th. As you can see where this little crosshair is, I'm about to snipe it down. I'm sniping it at $38. So this basically means I'm spending 10K in USDC for 263 GMX. Now, I get this 263 GMX. But I remember I need to be disciplined. Oh, that was number 5. Be disciplined. The discipline you have to have is, hey, this is the trading range. I have to take profits here. I don't care if it keeps going up another 20%, 30%. I don't care. I'm being disciplined. I set the parameters. These are what I'm going to go by. Sure, you can change them over time, but keep in mind if you're constantly changing it, you may end up buying the tops and selling the bottoms. So don't be greedy and be careful with what you're doing. So 2 days later, I can literally sell this for 45 bucks. So from $38 to $45. Now, what would that look like? Well, I would basically get 11,835 USDC. Basically an increase of 18% or over 18% in my position, just in a matter of 2 days. Now, that APY per year would be a couple $1,000%. Not too shabby, especially on a coin that you may be bullish on. Now, I would buy it again 5 days later because it comes back into trading range. It comes in around $39 or $39.98. So let's just call it $40 GMX, and I'm going to drop the bag and get 295 GMX. So now this GMX I have, great, awesome. But hey, a day later, it pumps to 43.50, and I'm like, whatever, I'm going to sell this. It's about a 10% move. I'm going to be disciplined, and now I get $12,870. And a lot of people start flooding GMX. Now, I don't know what the bottom is, but it went down to 37. So, hey, I'm going to buy it. It looks like it dipped and then it started going back up. I'm buying at $37. All right, well, it ended up dipping to 25 bucks, but hey, I'm bullish on GMX, so I'm holding it long term. Now, of course, there's a chance that it goes to zero. So you do have to keep that in mind to make sure you manage your risk accordingly. But with GMX in particular, what happened is on November 13th, it finally came back up and it reached to $46. Now it reached $46, I'm going to go ahead and sell it. I'm going to get $16,000 now. So I turned this $12,870 into $16,000. This is after 3 trades. Now the next trade comes in. This comes in 2 days later. It's now at $38 because we just dropped back down. It's time for me to buy back in. So I buy back in. I take the $16,000 I have. I buy at $38. 2 days later, I now have 421 GMX. Remember what I originally started with? 295. As you can see here, after 10 days, my position is already starting to build up. So now, a day later, it's at $45 again. So it's up $7 per coin. Time to sell. 18,948. I go ahead and sell. I got my cash. And what do you know? 2 days later, it goes back down to $38. I'm going to go ahead and buy again. So I take my $18,948 and I buy $38 GMX. I now have 498 GMX. My position is now almost double when it originally started, just about 15 days later. So now I see here, oh snap, it's time to sell again. This is literally 3 days later. It's trading at $46. I sell, I get $22,937. I could basically go on and on and on, but basically in less than a month, I turned $10,000 into $22,000 just from trading back and forth with GMX. So of course the strategy isn't without risk, and there are risks involved when you're taking on this strategy, especially with something like GMX and some of these altcoins. First, GMX protocol could get hacked / exploited. When that happens, token's going to zero. It's over, done, forget it. Second, GMX goes to zero. GMX goes to zero, you lose everything, period. So if you want to play it on the safe side, the best thing to do is always get your principal out ASAP. So example of the first trade, you turn $10,000 into $12,000, take your 10 G's out. Just play with the 2 G's and do what you want. You can slowly take profits, whatever, but you have to practice safe strategies, because if you don't live for another day, you can't keep playing the game. The third risk is that the narrative loses interest. People pass, they move along, they're no longer interested, they're no longer buying the coin, and you have to keep this in mind. With a lot of these DeFi tokens, they are inflationary. When they're inflationary, that means if there's no buy pressure for it, it's going down because everyone's going to get diluted as they're inflating the tokens. Fourth, Bitcoin and Ethereum nuke. When those guys nuke, the rest of the market usually nukes. Now, GMX has been holding up well against the markets. Still, it's just something to keep in mind. Fifth, you are not disciplined and you literally buy high because FOMO kicks in and you sell low because fear kicks in. You have to be disciplined. Practice these strategies. Thanks for tuning in, guys. I hope you guys enjoyed this video. If you did, make sure you guys smash up the like, subscribe to the channel. Tell me what you guys think of this video and tell me what you guys think of this strategy. And if you guys want to join the Discord, see what I'm doing in the markets and get other strategies like this I don't show on YouTube, you can check out the link in the description below. Also, if you guys haven't heard about the latest MetaMask update, this was 6 days ago. MetaMask is starting to collect user IP addresses. There are different ways you can protect yourself against this, and especially being in crypto, a VPN is a need. NordVPN, they did sponsor the channel. They are offering 3 months free. I'll give you guys a link in the description below so you guys can get that. You guys can also check out the video I made about MetaMask showing you how you can protect yourself. Let's go ahead and hit you guys with a wisdom one-liner. Proverbs chapter 12 verses 15. The way of a fool seems right to them, but the wise listen to advice. Be good, be righteous, be wise. Peace.